So we just heard the latest earnings results from Empire State Realty Trust, which is one of my favorite REITs, and people sometimes get tired of hearing me talk about. But the business is kind of an interesting one. It's an office REIT, which is kind of on in the penalty box as far as commercial real estate goes. There's a lot of fear that office property owners are going to be in trouble when they have to refinance their properties now that occupancy's fallen, property values have fallen, and interest rates have gone up. So, an office in particular is one that's struggling right now. The work from home trend is not its friend. But Empire State seems to be doing pretty well. Their office properties are mostly located in Manhattan. They're all in the surrounding area. There's some in the New York suburbs, there's some in Connecticut. In the first quarter, they reported that their Manhattan office properties, their occupancy rose 180 basis points just since the end of the year. Over 90%, 90.7% of their Manhattan office properties, including the Empire State Building, are occupied right now. That's up from 88.6% a year ago. So that's the opposite direction that a lot of people would have you believe that office occupancy is trending. The total portfolio is doing really well, up 240 basis points in occupancy from a year ago. They also have begun acquiring multifamily properties in Manhattan. Those are doing very well. The rental market's really strong right now. It's not all good news, though. The same store NOI, net operating income from their properties, was down 7% year over year in the first quarter, despite higher occupancy. Expenses are up a little bit, and they're having to kind of give tenants a break to renew their leases. As you might expect, tenants with fully escalated leases, if they're expiring, especially in today's economy, might be inclined to say, we don't need an office space anymore. So Empire State has had to kind of give people breaks and things like that. But there is a lot to like. One of the most unique things about this REIT is that they own the observatory that's on top of the Empire State Building. That's one of the must-do tourist attractions if you go to New York. The visitor count for the observatory was up 65% year over year in the first quarter. Now, take that with a grain of salt. That's comparing it to the first quarter of 2022 when the Omicron wave was going on. So not a perfect comparison. But operating income from the observatory was up 10% over comparable 2019 levels. So definitely has recovered from the pandemic. The company's buying back stock still. They've spent almost $300 million on buybacks since March 2020. Continue to buy back shares. That says a lot. It's a pretty small company, so that's a big amount. And they actually have quite a bit of liquidity, including over $270 million of cash. So all in all, a really good quarter. I am holding on to my shares. It's down significantly because of all the uncertainty in the office space, but it's one that I'm a big fan of.
Yeah, I mean, there isn't a lot of hopeful things coming out of New York office real estate as of late. So to see, it's kind of like the cleanest shirt in the dirty laundry, I guess. You look at things like revenue, EBITDA, things like that. They're holding up. You're not looking at it being, and anybody's going to get blown away by this. And it does make me wonder, like, what comes next. Is Empire State going to be in a position to take advantage of what looks like a distressed real estate market in New York, and can it leverage that, or how much can it? One of the things we talked about is how much office space is needed these days. And kudos to them for keeping such a high lease rate when you hear of other places down into the physical occupancy levels down in like the 60% range. So it'll be an interesting story to follow. It seems to be holding up well so far, but where it goes from here.
One of the real interesting things about this company is that it's been led by the same family since the 1960s.
Yeah.
The current CEO, Tony Malkin, is the son of the company's founder that acquired the Empire State Building in the 60s. And so they've been through a lot in New York. They've seen a lot. And keep in mind, this isn't the first time that everyone's been saying no one's going to want to work in New York offices anymore. Remember, I mean, right after 9/11, people were saying the Empire State Building in particular. People were saying everyone's going to leave that. No one wants to work in a high-rise building in New York anymore. And maybe there was a pullback for a little while, but it did well over time. So I kind of have faith. I like that they're, although it sounds counterintuitive, I like that they're accepting kind of lower base rents at first on new leases, kind of to get past this period. They want to let the work from home trends stabilize and things like that. And they want to keep their properties full while that's happening, because there will be, I mean, I think we can all agree that offices, especially in New York City, are going to have some place in the economy. It's just a question of where the work from home trend will land. And I think it's going to be a couple years till we figure that out. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.